There has been a lot of debate and even a delay, but April 2021 is the big date for the IR35 or off-payroll reforms in the private sector. Just to recap, the main difference to the old rules is that liability for making the correct inside or outside IR35 call moves away from the worker or contractor and onto the end client or fee payer, for example, an agency. This new obligation makes companies nervous because now they must make the status check and confirm this in a status determination statement, or SDS. Even with best intentions, the SDS still does not guarantee 100% safety against tax penalties in the intricate world of IR35. Sounds complex? Yes. Time-consuming? Definitely. But don't worry, there are compliance substitutes if using a limited company now seems a bit, well, limited. What we do. Here's a Fab 4 from Orbital that could provide the answers. CIS and non-CIS sole trader. This is suitable for construction-specific contractors who wish to be self-employed, and there is also non-CIS sole trader for those in other industries. The CIS status check is less fuzzy. It's the supervision, direction and control, or right-of, test, with liability sitting with the intermediary closest to the end client. Self-employment terms are issued on a contract for services. Subcontractors must register for a 10-digit unique tax reference number. CIS tax is deducted per payment after HMRC verification. Non-CIS contractors are paid gross. Subcontractors sort their own national insurance costs and complete a self-assessment each year. Umbrella PAYE. This is a tried and tested option that works across multiple industries and provides all the trappings of PAYE. The worker becomes an employee of Orbital, engaged on an overarching contract of employment. An uplifted rate is offered which must cover employment costs besides their pay. Mileage expenses may be reimbursed for those not caught by SDC or the write-off. All tax and national insurance is deducted at source. Supporting key information documents, or KID documents, clearly explain all payslip deductions. Joint employment model. Another PAYE model, which sees the agency or client and payroll provider become joint employers. It allows workers' earnings to be classed as disbursements, and therefore they're exempt from VAT, meaning cash flow savings. It's free for the worker, no margin taken. Straightforward PAYE rate, no uplifted rates. Full employment rights with tax and national insurance deducted at source. A specific employer tax reference number confirms the collaboration between all parties. Cash savings can be made on VAT and employment costs. VAT is only applied to the processing fee. Professional employer organization model. PEO, as it is known, originated in America many years ago as an outsourced package that offered additional employee benefits like free healthcare. It's simple PAYE. Here's why. It's free for the worker. A straight-up PAYE rate is offered, no uplifted rates. Similar to PAYE Bureau, but this is a 100% outsourced service, with workers contractually engaged and paid by Orbital. The client is invoiced for full earnings and employment costs plus VAT. It's cost-effective and easy for companies with or without in-house payroll. What we also offer: a full range of insurances, online and app facilities for speedy registration and payslips, employee well-being and high street discount offers, onboarding with the Good Work Plan, multilingual staff, and robust right to work in the UK checks. What we don't do: we won't ever suggest using non-compliant models that put you at risk. This is why we are accredited with the highest umbrella industry standards. Likewise, we'd never suggest a loophole in order to get around the off-payroll rules because, well, there aren't any. If you need options and honest advice ready for the IR35 changes affecting the private sector and possibly yourself, check out the information on our website, or please get in touch to see if we can help.